details of the intricacies in filing form AOC 4. We are fortunate to have CS Manoj Garu with us, and now that we are going to, before that, the meeting is going to start the things, and I request to play the motto song. You need not rise, you just place your hand on your heart.
Yaesha supteshu jagrati, Yaesha supteshu jagrati, Kamam 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 pursho nirvimanaha tadeva shukram tada brahma Tadevamritamuchyate Tasmin lokaha shataha Sarvetadunathyati kaschan Etadvaita
Request our chairman to give the opening remarks.
Yeah, thank you, sir. Today's resource person, CS Manoj Garu, my immediate past chairman, G. Srinivasarao Garu, colleagues at MC, past chairman of Europe branch, and all the members across profession and practice who have joined us for today's CPE seminar on the topic intricacies in filing of Form AOC 4. Good evening to one and all. At the outset, I welcome you all for today's CPE seminar. Friends, we all know that there have been extended in due dates, and we have continuously saying, and now we have a small discussion with our resource person Manoj Gar also, that sumomoto government has extended time for filing forms. But what are the intricacies? There are a few forms where we can file on our own with the little help from the web or from the professions like this thing, where we can what are the key points to be observed when we are filing these forms. So with this thought in mind, Vijayawada branch management committee has approached Manoj Garu to give a brief, deliberate upon this topic, so that our members could get benefited at large. So I request all the members who are logged in today to pay keen observation to sir and note down the vital aspects which will be touched upon by sir. And also I should stress upon that this being the third day of the three-day series program conducted by Vijayawada branch on Friday, Saturday, and of course today being Monday. Those two programs were a big success, and today also I hope a good number will be there, and they'll be listening to Sir Manoj sir, whatever sir want to deliberate upon today. And not only that, we have also with the help, DSS sir and myself, and we have planned a session on analysis of union budget that's going to be on February 3rd. Flyers will be sent to you. Speakers Abhishek Murli sir and Ramakrishna Sanghu sir, both of them have agreed to deliberate upon direct tax implications and indirect tax implications. So I also request members to join us on February 3rd. With this, I hand over the proceedings to GSR Garu to briefly introduce Manoj Garu to this August Garu. Sir, over to you.
Thank you, sir. Thank you very much, Chairman Garu. This is to add some of the things which our Chairman sir is telling, that we are also having on 4th and 5th also we are going to have some more CPE sessions. On 5th, it is filing of form number 9 and 9C. That is annual return and reconciliation statement is also confirmed by V.S. Sudhir Hirgangi Associates on 5th. It is from 5 o'clock to 7 o'clock. And 4th, we are trying to rope one of the very good faculty. We are trying for Gurraj Acharya sir, but he is not at all this thing. We have to yet to go and contact him. It is the topic being tax audit on shares and F&O, because it is now going to be the burning topic, and there is a guidance note from our institute also how to treat the savings part, their investment in the mutual funds or F&Os, whatever the case may be, whether we have to consider that it in a tax audit mode or something like that, that we are planning it on 4th. So definitely in 3rd, 4th, 5th, you just kindly block your days so that very good programs are going to be conducted on these 3 days also. We are very much thankful to Manoj sir for accepting today's session, because being a company secretary in practice, he knows in and out of the things, that how we have to file the forms, what are the extra care that we have to take while filing the forms and all these things. Just we are going to listen very briefly about him. And now that it is my duty to introduce him to the august audience. 1 second, let me. Sorry, my laptop got a little bit messed up. 1 second, I'll just. Sir, it's there. So Manoj Kumar Koelkar is a company secretary in practice and an insolvency professional also. He has served 5 years in the employment in diverse sectors. He is a registered trademark agent as per the provisions of the Trademark Act 1999, and also a law graduate, a fellow member of the Institute of Company Secretaries of India, and has now garnered extensive and rich experience of 7 years in practice in various facets of the, including all the matters relating to the company law, SEBI, FEMA, RBI, labor laws, IPR, and also so forth. With this brief intro, I present Manoj sir to you all. Thank you, sir, and it is now over to you, sir. Manoj sir.
At the very outset, I would like to thank Vijayawada ICI chapter for inviting me to take up this session. It is my privilege to be present virtually with this august branch of Vijayawada. I love to say it as Bejwada. That is what the word which I have back of my mind. I met G. Srinivasa Rao Garu many times during our client meeting, and I have seen his passion towards the profession, and I'm thankful to him and Punachandra Garu for inviting me for this session. I've been given the task of presenting my views on this AOC 4. My dear friends, I would like to make this session as more interactive. I believe there are around 68 members, which is a quite good number. And it's a learning process. It is not that I know the subject and you are listening. I feel that we are exchanging our views on this subject, and it is for the mutual benefit. I would like to make it more and more interactive. Any person who is having anything to add or anything to ask, they can put in the comments. We would like to clarify. Rather, we would like to exchange our thought process. So before I share this, my PPT, I would like to tell the doctrine of the constructive notice, which was being taught to us when we were foundation. The company is an artificial setup of business, which is controlled by the members. However, in case of big size of company, it is scattered over throughout the world. Now the world is very small. It is a global village. It is the members who have delegated the responsibility of all the compliances to the board of directors. So it is the board of directors who have the onerous task of maintaining and running the company and ensuring the applicable laws of the land have been complied with. So the members should aware what is happening in the company. So with this brief thought, the lawmakers have found a method where the brief, what has happened during particular financial year can be updated to members. So it is the presentation by the board of directors in the form of annual report, which is a very, very comprehensive document, which will cover all the activities which has happened during particular financial year, and is been presented before the members as a consolidated results of the affairs of the company during a particular financial year. My dear friends, New Companies Act has taken away the advantage of having different financial year. Earlier in India, we used to have different financial year. If you go to Gujarat, it was from Diwali to Diwali. Somebody will have Bhogi to Bhogi. All those has been done away. Now it is only one financial year. So I was speaking about doctrine of constructive notice. Any person who's interacting with the company should know who are the directors, what is the turnover, what are they dealing with, what are the main objects. So to achieve the purpose under the doctrine of constructive notice, once I file the annual report with the MCA portal, it is available for public to view. So any person who's going to interact with the company in any manner, it is this basic fundamental duty to download the latest annual report, run through it, and to know what is happening in the company. So the doctrine of constructive notice is fulfilled. So it is the responsibility on the person who is dealing with the company to be aware of what are the affairs of a company for a particular financial year. Now let me share my PPT. Screen share. Yeah, the topic which was given to me was intricacies of AOC 4. My dear friends, if you see the entire Companies Act, there are two types of compliances which a company is required to make. It can be extended to any act which is applicable for a company in India, whether it is Income Tax Act or any act for that matter. There are two types of compliances. One is event-based compliances. The other one is time-based compliances. Event-based compliance means when something is happening in the company. Let us say I'm appointing a director. A company is required to do certain compliances when they appoint the director. So they need to have a board meeting to approve the appointment of the director. They are required to file certain form with the rest of companies. These are all event-based. When the director is not appointed or not resigned, or there's no change in the designation of a director, I'm not required to file any form for that matter. So when there is no event which is stipulated in the Companies Act for that matter is taking up, I'm not required to do any compliances. So this is event based. It can be any event, increase of authorized capital, allotment of shares, or anything. Now, time-based compliances, irrespective of the operations of the company, a company is required to do certain minimum filings with the ROC, that is annual report and annual return. We call annual report is under form AOC 4. Earlier it was form 23 AC under the old act, and annual return, that is form number MGT 7. So these are the two compliances which a company is required to do with ROC, irrespective whether the company is doing its operations or not. So this is time-based compliances. There are certain other time-based compliances as well. So broadly, under any act for that matter, there are two compliances, time-based and event-based. So we are following this AOC 4. Form number AOC 4 is a time-based compliances. Every company, irrespective of whether they are doing business, there's an exception for dormant company, but 99.9% of all the companies which are not dormant are compulsorily required to do this time-based compliances of filing annual report with the Register of Companies. AOC 4, we are going to discuss what is this form is about, why there's a necessity of the form, what are the provisions which are governing these forms, what are the rules which are governing this form, and who are required to sign a director's report, what are the contents also we'll see, and what will happen if I don't do it. So the penal consequences we are going to see. As I said, annual return, etc. It's not, this is nothing but the timely based compliances and the event based compliances. Now, before I go to AOC 4, I would like to have certain definitions which we are supposed to have absolute clarity. These are some of the definitions which I found are useful for us to understand, deliberate. Then based upon these sections, we can just understand exactly what is AOC 4 is. My dear friends, one thing which I would like to tell you, AOC 4 is the lengthiest form which is there under the Companies Act. If you see any form which are prescribed under the Companies Act, none of the forms are so lengthy and so elaborate. AOC 4 is one among them. As a student, if you want to learn the Companies Act, master the AOC 4, you will be, I'm telling you for sure, you will be capturing most of the provisions, important provisions which are guiding a company on day-to-day affairs are covered. So I always tell to my trainees and other associates who are there in my office, learn, master the form and the this help kit which is provided by MCA. Help kit, my dear friends, is the best of the document. One should see, understand, read. Reading is very important. We always, most of the professionals and no students, they'll go on assumption based. So if we want to master the subject, one is the help kit. If you read the help kit, nothing like that. Everything, every aspect, even the smallest of the smallest aspect is covered in the help kit. What is this form is about, when it was introduced, what are the sections which are covered, each and everything has been elaborately discussed in this help kit. So before doing any form, you please run through the help kit, understand it. It will be very helpful for every form for that matter. I have not covered. Yeah, financial year. Let us see what is financial year is. Financial, yeah. Section 2, subsection 1 of the Companies Act 2013 defines financial year as a period ending on the 31st of March every year. So it is very simple definition which says that financial year, it is obvious, it is 12 years if it is other than the first year of incorporation. In case of first year of incorporation, it is from the date of incorporation till the next year 31st of March. For example, if I'm incorporating a company on 31st of December of this financial year, let us say 22, my date of incorporation is 31st of December 22. So the financial year, the first financial year for this company will be 31st of December 22 to 31st of March 2030. Now, the same scenario, let us see that no, I got the certificate of registration on 1st of January 2030. What will happen? My financial will get drastically changed, because as per the definition, it says defines financial year as a period ending on the 31st of day of March every year, and where it has incorporated on or after the 1st of January of a year, the period ending on the 31st of day of March of the following year. So 1 day of difference, my dear friends, makes a lot of difference. So 31st of March, 31st of December, the financial year will be 31st of December to next year 31st of March. Whereas if my date of incorporation is on 1st of January, then my financial year will be following year. So we normally used to educate to a client saying that no, don't incorporate a company on last week of December or at least 15 days of December. Hold it, because no, unnecessary you will have a financial year compliances which you can avoid if you get a certificate of incorporation in the January. Hope I'm very clear on this. Now, another important factor for this financial year is that where a company is a company, or for that matter body corporate, is a holding company or a subsidiary company or associate company of a company incorporated outside India. If I am a company which is incorporated in India and I'm having a holding company outside India, or my subsidiary companies outside India, or any of my associate companies outside India, then I'm required to have the consolidation of accounts. We'll discuss what is consolidation of accounts. In that case, the financial year is like this. Let us read the provision. I'll just read. It says, where a company or a body corporate, which is a holding company or a subsidiary or associate company of a company incorporated outside India and is required to follow a different financial year, if that foreign holding company or that foreign subsidiary company or that foreign associate company is required to have a different financial year, and for consolidation of its accounts outside India, the central government may, an application made by an Indian company, will allow to have a different financial year. I have a company, it's a public limited company. You can also see that Rain Commodities Limited, where it is a listed company both on BSE and NSE. If you see the financial year of that company, it is starting from 1st of January to 31st of December, because it has a subsidiary company outside India, where the subsidiary financials, according to that foreign laws, is required to have the financial year from 1st of January to 31st of December. This is the only ground where ROC will permit you to have a different financial year other than the normal financial year, that is from 1st of April to 31st of March. This is clearly given under section 2 subsection 41 of the Companies Act. And my dear friends, this form AOC4 is permitted if I'm filing the financials of a company on or after 1st of April 2014, that is on the commencement of the Companies Act 2013. If any form is required to be filed before this 1/4/2014 or under the old act, I need to have 23 AC and ACA. Those are the forms which are relevant for this. This AOC4 is restricted to only the compliances under the new act. So this is one of the very, very important definitions, my dear friends. Now let us see what is the other important definition we are supposed to see. Books of accounts, section 2, subsection 13. This is a primarily and fundamental definition. It is an inclusive definition that books of accounts includes records maintained in respect of all sums of money received and expended by a company and matters in relation to which the receipts and expenditure take place. So I am supposed to disclose what is the money I've received during a particular financial year and what is the amount I've spent it, and along with the why I have received it. All sales and purchase of goods and services by the company, all assets and liabilities of a company, and item of cost as may prescribed under section 148 in case of a company which belongs to a class of company specified under that's a manufacturing company. Now, another important factors which we are supposed to keep in mind while preparing the books of accounts is that the books of accounts should give a fair and true view. So that is what the word which is used. True and fair view has to be used for preparing the books of accounts of the state of affairs of a company, including that of branch office or offices. I need to prepare the books of accounts which will give a true and fair view of the state of affairs of the company. Such books of accounts shall be kept on accrual basis and according to the double entry system of accounting. So normally it is the double entry system which I'm supposed to maintain, and it should be prepared on accrual basis, where all or any books of accounts and other relevant documents are kept in such a place as the board may decide. Now, books where I'm supposed to keep the books of accounts, it has to be kept at the register office of the company. And due to reason, if I'm keeping these books of accounts other than the place of the register office, I have to inform the ROC within 7 days, stating the full address where I'm keeping the books of accounts. Now, a very important question which has been asked by many of the professions, whether the books of accounts are mandatorily required to be maintained in the electronic form. Now, the answer to this question is under section 128(1) read with rule 3 of the company's accounts rules. It says that the company may keep the books of accounts or other relevant papers in electronic mode as the manner prescribed in the rules. Why I'm saying that, no, whether the electronic records are required to maintain or not, because one of the questions which has been asked while filling the form is it will ask whether the books of accounts are maintained in electronic records or not. We have to say yes or no. Then the question arises is when the option is given yes or no, then I have an option that I need not maintain, but the answer is not like that. It is not that simple. There was an amendment which is effective from 1st of April 2020, where they said that no, every company which uses accounting software, my dear friend, please highlight, I'm highlighting the words, every company which uses the accounting software for maintaining its books of accounts shall use only such accounting software which has a feature of recording audit trail of each and every transaction. So until 31st of March 2022, I am not supposed to maintain books of accounts in electronic way mandatorily. However, from 1st of April 2022, I am supposed to maintain compulsorily books of accounts. So this you need to be very, very careful. You are not given an option to fill whether it is optional or not from financial year 22-23. So accordingly, you have to advise all your clients that the electronic records of books of accounts need to be maintained mandatorily. Now, the tally package is also coming with the features. The features are that they should be having the proper system of storage, retrieval, display, or printout of the electronic records. The backup of books of accounts and other books papers are to be maintained in India only. Wherever the books of accounts can be maintained elsewhere in the world, but the backup should be maintained in India only. There are certain other information which we'll see while filling up the form. This is another important definition. Now, what is financial statement? Financial statement as per section 2, subsection 40 of the Companies Act includes the following: balance sheet as on the end of the financial year. As you all know, that balance sheet will be as on a particular day, not for the period, and profit and loss account or income and expenditure statement in the case of company which is a non-profit company for a particular financial year. Cash flow statement, it is not compulsory for some of the organization. We'll see what is that. statement of changes in equity if applicable, and notes to accounts. Statement of changes in equity if applicable. This is very, very critical. Now, I will tell you, I'll share one practical example. One of my friend's father got a notice from Bank of India wherein he was shown as a defaulter for availing the loan and not paying the loan. Then that friend has referred the matter to me. I was just looking into the, I was digging all the information whether the gentleman was a real defaulter or not. But to my utter surprise, he has resigned the company way back in 2008. But the company has availed after his resignation in 2009. And now we are getting a love letter from Bank of India threatening him that they will be declaring him as a defaulter. When I looked at the annual report in those days, absolutely it was not at all mandatory to give the statement of changes in equity, not even mandatory to give in the annual report how the equity has flown. It is only in the annual return. So I could not find whether he is a shareholder or not by looking at the annual report in those days. So now the lawmakers, my dear friends, why a law is being amended, it is only to plug the loopholes. So the discrepancies, the loopholes which were there, which were eventually being exploited by some of the business persons, some of the promoters, fortunately, unfortunately, that's been plugged. Now the lawmakers are very, very clear that everything has to be maintained in a transparent way. That's why the statement of changes in equity, it will avoid a lot of disputes, even in case of management disputes, where the promoter will say that no, I was the shareholder or not. The moment you display that no, the statement of changes in equity, it is very clear who are the shareholders as on particular day. Then notes to accounts. Notes to accounts, as you all of know, we are all chartered accountants, you are well versed with this notes to accounts. Now, while filling this statement of changes, the precaution which I'm supposed to take care is you have to compulsorily see the share transfer form, the allotment forms which has been filed by the company. Recently, I don't know how many of you are aware, there is one some Chinese company has formed 3-4 companies in one residential address, which address is not traceable, and the company secretary, poor company secretary, he was obligated to certify the intimation of register office of the company with the ROC that he has visited the ROC, he has visited the register office. Now he has been caught. So one should be careful in filling up the statement of changes in equity if applicable. We have seen financial year, books of accounts, we have seen. Now, annual general meeting. Now, one thing which I would like to say that financial statement, financial statement, section Companies Act specifically provides that this financial statement shall be in the form as we provided for different classes of companies. Schedule 3. If you see Schedule 3, they have given the elaborate form of the balance sheet and profit and loss account for both standalone, consolidated. They have given elaborate, very elaborate. But this is under section 129. Section 129 is not applicable to an insurance company or a banking company engaged in the generation of supply of electricity, or any company specifically governed by that specific act. Now, IRDA, I'm giving example. IRDA, they are supposed to have their different financials. Then banking company, Banking Regulation Act is there. Companies engaged in generation of supply and powers of electricity, they are required to have different format altogether. These financial statements are required to be placed before the annual general meeting by the board of directors. This is mandatory. Now, whether audited or unaudited, we'll see how the process is. Now, when the consolidation will happen, where the company has one or more subsidiaries or associate company, it has, in addition to standalone financials, is also required to have for all its subsidiary companies and associate company, in accordance with the applicable accounting standards, a consolidated financial statement, which shall also be laid before the annual general meeting. There are two types of financial statements: standalone financial statements, if I don't have any holding a subsidiary company or associate company, and a consolidated financial statement shall be laid before the AGM by board of directors in case I'm having a subsidiary company or an associate company. A company is also required to attach with its annual report salient features of the financial statement of its subsidiary or subsidiaries or an associate company. Now, audit is required to be done as though the audit is required to be done for a standalone company. Whatever the requirements are there under the applicable law for getting the audit done for the standalone financial statement, the same thing mutus mutandis are applicable to the consolidated financial statement as well. In case any deviation is there in terms of financial statement, deviation from the accounting standards, the reasons for such deviation and the effect of the such deviation in the financials are also required to be laid before the general meeting. Let us see another section. 128. Before this, we'll see this annual general meeting. Let us look at the annual general meeting. Yeah, section 96, books of account, financial statement, annual general meeting. Yeah, the definition of annual general meeting, I wanted to read out for the benefit of the members. It says that every company other than OPC shall in each year hold, in addition to any other meetings, a general meeting as its annual general meeting, shall specify the meeting as such in the notice calling it. So what is annual general meeting? It is a general meeting where I'm specifying that meeting as a annual general meeting. So it is a notice which will define whether the general meeting is extraordinary general meeting or annual general meeting. Under the Companies Act, as you all know, there are two types of meeting. One is the extraordinary general meeting, and another one is annual general meeting. So annual general meeting, the notice should specify that it is an annual general meeting. Now, the question arises is when I'm supposed to have a annual general meeting. It says if it is a first financial year, within 9 months from the closure of the financial year, other than the first annual general meeting, it is 6 months from the closure of the financial year. The gap between two AGMs should not exceed 15 months. Now, another important factor, one should look at it that no, adjourn annual general meeting. If whether the members have the right to adjourn the annual general meeting, yes, the answer is yes. A company may adjourn its annual general meeting with or without seeking the approval of ROC. In case the adjourned AGM is held within 6 months from the closure of financial year, no approval of the registrar is required. My dear friends, the deadline for conducting the AGM is 6 months from the closure of the financial year or 15 months from the last AGM. So whichever is earlier. If the adjourned AGM is held after the expiry of 6 months from the closure of financial year, then I'm supposed to have register of companies prior approval. Now, the crucial thing which one should keep in mind while applying for approval of register of companies for extension for conducting AGM is they are supposed to apply for the approval on or before the due date where I'm supposed to send the notice. In case of a public company or a private company, I'm supposed to send the notice, dispatch the notice of AGM having 25 days, 21 days clear days. It says 21 clear days. 21 clear days means 21 days the gap of should be there from the date of AGM and the date of dispatch of the meeting. So it is 21 plus 2 days. In addition to that, I'm supposed to give 2 more days for the meeting for the reaching the notice through registered post or through courier. So it is 25 clear days. So if I'm having an AGM, if my AGM is scheduled to be held on 30th of September of a financial year, I am supposed to dispatch the notice of AGM on or before 5th of September. So I'm supposed to apply the approval of ROC before this date. I can't go on 29th of December and apply for extension of AGM. No, ROC will not apply for that, will not approve for that. So one should be very, very careful that you need to be very careful while applying for the extension of AGM with the ROC with special cases. What are the special cases also we'll see. ROC for special reasons will extend the date of AGM up to maximum of 3 months other than first AGM. So ROC do not have any power to extend the AGM if it is a first annual general meeting. It is only during the other than the first AGM the ROC will have the power that to extend the AGM for a maximum period of 3 months, not beyond that. Now, a question arises whether the original AGM and the adjourned AGM is one and the same, or it will be considered as a separate meeting. No, they are considered as the same meeting. It is only extension of my meeting, not a separate meeting. What are the reasons for adjournment? If the quorum for conducting the annual general meeting is not present within 30 minutes or half an hour from the scheduled time of conducting the AGM, then the meeting shall stand automatically adjourned to the same day in the next week at the same time and the same place, or such as the date as the board may decide. Now, in case the meeting is called by the requisitionist, some of the requisitions, they have the power to call for the AGM. In that case, if the minimum quorum is not attending, then the meeting can stand cancelled. It is not adjourned, it stand cancelled. Now, what are the reasons for adjournment? Let us understand. Where the accounts are not ready, in case the accounts are not ready to be laid before the AGM for adoption. My dear friends, you please understand the process of laying the annual general meeting, financials before the AGM. The board of directors will approve the financials. They have the authority to approve the financials with or without modifications. When the power of approval is there, they are also having the power to modify, reject also. Whereas the members, they don't have they are not being placed for the purpose of approval. They have been placed for the purpose of adoption. The word adoption is used only for the purpose of adopting the financials by the members. It is only used when the members are adopting the financials of a company. So the members per se, they don't have any right to reject it. They have to approve it. They have to adopt it. They don't have the right to approve. It is the adoption. So they are taking note of, in a sense, they are taking note of the financials which have been presented to them by the board of directors at the general meeting. Now, what is the effective date of resolution passed at the adjourned AGM? So the effective date of the AGM shall be the date at which the adjourned AGM is held. It is not the original AGM which has been passed. The reasons for which the ROC may accept it is only on exceptional grounds due to loss of the company's books of accounts, due to any accident, financial data is lost due to any accident for which you are supposed to prove the insurance claim, if you have insurance claim, or you have to lodge a police complaint, or occurrence of any natural calamity, or non-availability of members on valid grounds. In one of the case where the member, there are only 2 members in a private limited company, and in order to call for the general meeting, you need to have 2 members. 1 member is expired. On that ground, we went to the ROC and got extension because we have to do all the procedural aspect under the the rituals under the relevant religion. For that purpose, ROC has granted the extension. Exceptional and urgency grounds, only the ROC will grant the exceptions. And my dear friends, remember, ROC will not grant extension beyond a period more than 3 months under any circumstances. Now, COVID impact. Financial year 1920, we were fortunate that we got the extension for 3 months. That is for the financial, the AGM which was supposed to held till 30th of September got extended till December 30th. So that 3 months was there. Now the question arises where I can apply for extension with ROC beyond 3 months, which is already been granted by MC. The answer is no, because ROC do not have the power to grant extension for more than 3 months under any circumstances. For the financial year 2021, MCA on suo motu, they have relaxed the period for conducting the AGM beyond the due date by 2 months. Now it is 2 months. Now we can apply for extension of the financial year only for 1 month. That is 3 months in total. 2 months already given by the MCA. Now 1 more month, if you have a genuine ground, then you can approach the ROC. ROC of relevant state will consider the application, and based on merits, he will give the extension. This is another question which was asked by many of my friends that no, what will happen if the AGM, now AGM can be conducted online also, which has been permitted very much by the ministry, and they are also relaxed the provisions where I can approve the financials by conducting the meeting through online. Now, in case both the directors or members or the auditors and directors are sitting separately due to COVID restriction, how they are going to sign the financials? The answer which is given by the ministry is you can affix the DSC of the respective person on the financials and mention the date from which they are signing, because in the minutes, while capturing the minutes of the AGM, will capture the place from which a member or the auditor or for that matter director is attending to. So you can use the DSC, or you can make the other person to take a printout, affix his physical signature, scan and again send it to other party. Other party again will take a printout, affix his physical signature, and so on and so forth. But the intricacies which are required to be looked into, that no, the person who's signing at that particular place has required to write the place of signing. If there are, the MD is there, then two directors are there including one MD, then CFO, CS, then CEO and auditors are there. All of them are scattered across the globe. Every person is required to write the place from where they are signing. There is no restriction, my dear friends, because AGM can be conducted online as well, or they can affix straight away the DSC. Now, I would like to. I hope I'm just no. I'm just explaining the way members are able to grasp. If any person has any kind of query or doubt, they can just chat, or they can raise the query. Any person is having any doubt, please. So I hope everybody is. Yeah, let us move to next other section 128. What I was thinking that I can open that the help kit for this AOC4, and we can have one more round of understanding how the form works, or we can directly go to the form also. It will make members to understand the concept very easily. This we have seen every company to prepare and preserve at its register office books of accounts maintained electronic for a period of 8 years. Then let us move to the financial statement. 129 financial statement also have seen. Let's see 134. Yeah. This is section 134 of the Companies Act 1413, which says the financial statement, including consolidated financial statement. You have understood what is consolidated financial statement, if any, shall be approved by the board of directors. The word uses approved by the board of directors. So the word approve includes the right to reject, right to make modification. When a board is having an audit committee, first audit committee will scrutinize it, then they will recommend it to the board of directors, because the committee do not have the power to approve it. It has to only recommendatory power. So the board of director, the audit committee, if any, will be recommending the financial statements, and it will recommend to the board of directors. Board of directors, then they will approve the financial statements. The financial statement, this concept, who is going to sign the financial statement, is very important. Let us see who is authorized to sign the financial statement. Financial statement shall be signed by the chairperson of the company. If I am the chairperson of the company, and if I'm authorized by the board of directors by passing a specific resolution authorizing me to sign the financial statements of the company, including the consolidated financial statement, then I can sign the financial statements as a chairperson of the company, not for the board. My dear friend, I believe that you understand the difference between chairperson of the company and chairperson of the board. Chairperson of the company is appointed as the chairperson of the company, who has the right to preside over all meetings of the company, whether annual meeting or board meetings. Whereas chairperson of the board, where there is no chairperson, it is the members present who will be electing one of them as the chairperson, or two directors, of which one shall be MD if any. It is or if the financial statement is signed by the chairperson or any two directors, including one MD. And so if the chairperson is signing the financial statement, no need to get it signed by another two directors. Only in the absence of signing the financial statement by the chairperson of the company, the question to sign the financial statement by two directors arises. And if such company is having a managing director, that managing director shall sign the financial statement. There is no exception because it is mandatory. And the CEO, Chief Executive Officer of the company, plus CFO, plus company secretary, if appointed. If these three managerial personnel are appointed by the company, they are mandatorily required to sign the financial statement. Now, a question arises now in few of the IT companies, there's a fancy designation for CFO. The company has appointed Director of Finance or Financial Controller or Head Finance or VP Accounts and Finance, whether they will be deemed to be the CFO of the company. Let us see the definition of the CFO. Section 2, subsection 19, if I'm not right, they say that no, CFO means a person appointed as Chief Financial Officer. It says CFO means a person appointed as the Chief Financial Officer. So any other person who is designated other than CFO, even though he is doing the work of the finance or accounts or acting, delivering the duties of a CFO, will not be deemed to be CFO. He has to be designated only as a CFO. There is no exception for this. Now, who will sign the director's report? The director's report shall be signed by the chairperson of the company. Again, chairperson of the company, if again it is has to be authorized by the board of directors by passing a specific resolution, or two directors, of which one shall be MD if any. And the requirement of signing this, the director's report by the CEO, CFO, and CS is not applicable. Now, the auditor's report, every company shall file a financial statement, including consolidated financial statement. This we have seen, duly adopted at the AGM. We have seen the financial statements are to be filed within 30 days from the date of AGM. Now, what is the date of AGM? So, if my date of AGM is on 30th of September, when I'm supposed to file, this date of AGM will be considered as day 1 plus 29 days. So, within 30 days of the date of AGM also. It is not date of AGM plus 30 days. It should be date of AGM plus 29 days, because it is within 30 days of the date of AGM. Filing of statement by one-person company. A one-person company OPC shall file financial statement duly adopted by its members with the registrar within 180 days of the end of the financial year. So I'll be filing the financial statement within 180 days. So this is an exception for the OPC. Filing of financial statement by companies having subsidiary companies. This is the same. Before this, let us see what are the other provisions. The auditor's report shall also be attached to every financial statement. So financial statement will carry the balance sheet, profit and loss accounts, notes to accounts. In addition to that, it also carries the auditor's report. Now, the intricacies for the auditor's report, my dear friend, if it is a standalone company, standalone financial, the auditor's report will be addressed to the members of the company. Whereas if the auditor's report, in case of a consolidated financials, it will be addressed to the board of directors of the company, because I can't address to all the members of different entities in one report. So the consolidated financials are to be addressed only to the board of directors of the company. There are certain other information which I'm supposed to fill it up in the director's report as per section 134(3), including explanation or comments of the board on every qualification, reservation, adverse remark, or disclaimer. Whenever any auditor, for that matter, statutory auditor or the cost auditor or the statutory auditor, company secretary practice, cost accountant practice, or a chartered accountant practice who is doing the respective audit, they have any qualification or reservation or adverse remark or disclaimer, they are supposed to, the board of directors are required to answer such kind of qualification, reservation, adverse remark, and disclaimer. They are required to address these things. They are required to justify whether it is right or not. If it is right, to what extent it is right. A director due to illness unable. I think I have got some charts. A director due to illness unable to sign and put his thumb impression on financial. Can he do so? And if he, whether he can attach any medical facility. Interesting question. Please clarify whether all directors and auditors can sign digitally on financials or someone digital and someone physical. Now, Murli Krishna Garu, first question is whether all directors and auditors can sign digitally on financials or some with digital and some physically. Both are permitted according to the convenience. If I'm not having the facility to take the printout, I'm not having access to the equipment, I can digitally sign and other can sign physically. So there is no restriction. Oh, PPT is frozen. I'll just check. A director due to illness unable to sign and put his thumb impression on financials. Can he do so if he, whether he can attach the medical certificate? I doubt, because of signing this during illness, he is not understanding the director's report, and without understanding if he's signing and if there is something which he wanted to put to the members, to the notice of the members, and if he's not able to do that, it is not advisable to take his thumb impression on the financials due to his illness. Medical certificate and everything is correct, but the declaration which the director is giving, that no, he has read it, he has understood it, and he is certifying on behalf of the board of directors. So I don't suggest that, no, this is practically possible. It is not suggestible. I'll just see why this PPT is frozen. Now let us understand what is that, no, the contents of the board report. Board report, there is no the elaborate contents which are given under section 134(5). One is the director responsibility statement, which many of you are aware. Now, in the director responsibility statement, I have seen peculiarly the directors will give a declaration that annual accounts are being prepared on a going concern basis. You all know what is going concern. But my question here is, if the company is not conducting its business for a period of, let us say, 3-4 years, whether still, and there is no revenues at all, whether still the auditors can, the directors can certify that, no, they are conducting the business on a going concern basis. It's a question. I want the members to share their opinion, where a company is not carrying its business for 3-4 years and there are no operations, it is only expenditure. There is absolutely no operations in the company. Still, the directors can give a declaration that the company is carrying on its business on a going concern basis. Any one of you can share their opinion. I'm having my own reservation on this statement when the company is not carrying its operations for 2 to 3 years. Now, the director's report, I think there is some issue with the PPT. The director's report is also required to carry the report of fraud. This is very important, my dear friends. Reporting of frauds by auditor and their matters. If there is a fraud which has been found by the auditors during the process of their audit, they are supposed to write it directly to the central government if the amount of fraud involved is more than 1 crore. Then the directors are required to give the justification, nature of fraud with the description, approximate amount involved, and who are the parties involved. And if the auditor is not getting satisfactory answer, then he can directly report to the central government because of this fraud. Where the amount of fraud involved is less than 1 crore, then he is supposed to, the auditor is supposed to report this to the audit committee, giving the details of nature of fraud with description, approximate amount involved, parties involved into that, and status of remedial action taken. Let me recast. Before this, I'll just stop share. I'll just reshare my thing. Before this, I would like to ask one question: whether the cost audit report, which is submitted by the cost auditor to the company in case of a manufacturing company, which is required to maintain the cost audit records under Section 148, the cost audit report can be shared with the members and can be filed with the ROC. Yeah, I don't know. Yeah, cost audit report. My dear friends, I would like to just share my experience in this. Section 148 read with Rule 4 of the company's accounts. I think this is not captured here. It says the cost audit report and the other documents will be submitted by the cost audit to the board of directors and will be filed by the board in form CRF4. The same is not required to be enclosed along with the director's report, because it will contain a lot of confidential information, details about the costing, etc., which if disclosed to the general public can cause uh, can cause the damage to the company in terms of my opponent will my competitor will come to know what are the components of my costing, etc. So it is a confidential information. Even when we do MCA inspection, it is not available for inspection. Now, another practical question which has been asked, whether the contents of the director's report should contain the details of the company for a particular financial year, because director's report will be prepared after the financial year is over. So after maybe 5 months or 6 months, if I'm preparing my director's report in the month of August for the financial year, which is ended in April. So there's a considerable lapse of 5 months. So during these 5 months, certain things must have happened. Am I required to disclose this? The Act says it is not mandatory. It is only required to disclose the information for a particular financial year. And in addition to that, you are supposed to disclose the material changes and commitments, if any, affecting the financial positions of the company which have occurred between the end of the financial year and the date of report. So any material changes, if you feel it has happened during that 5 months of period, you are required to disclose. Otherwise, there is no hard and fast rule, because it is not, Companies Act is not like FEMA, where under FEMA everything is restricted unless it is approved, whereas under the Companies Act everything is permitted unless specifically restricted. So voluntarily, I can give a separate information as to what has happened during this 5 months of period after the expiry of the financial year. There is another information which I would like to share, that any information disclosure is already provided in the financial statements, need not repeat it. You can refer it in the financial statement, referring to so and so para we have already disclosed. So repetitions can be avoided. And in case the company has a website and it contains the policies of the policies of the company, the website contains the policies. I need not write the policies of those companies in my director's report. I can just refer to the salient features of the policy, and I can also give the any changes and the website address. That is more than sufficient. This is rule number 12. Another important rule which we're supposed to understand is rule number 12 of the company's accounts rules, which is more or less similar, which you have seen. Every company shall file the accounting financial statement with registrar together in form number AOC4 and consolidated financial statement, if any, form AOC4 CFS. XBRL has also been mentioned, which everyone is aware. Now, let us see what is that form AOC4 is all about. I will go segment wise, because this form is, as I said, this is the lengthiest form which is there in the Companies Act among all the forms. It has been divided in 6 segments, my dear friends. One is segment 1, information and particulars in respect of the balance sheet. Any information and particulars in respect of balance sheet is contained in segment number 1. Then segment 2 is for information and particulars in respect of profit and loss account. Then reporting of corporate social responsibility. Corporate social responsibility is itself is a separate subject altogether. Then a very important disclosure about related party transactions. Related party transactions are also required to be disclosed in the AOC 4. Segment 5 is auditor's report, and segment 6 is about miscellaneous. Let us see one by one, and we can just throw light upon this requirement of segment. I have just now captured what is there in segment 1. First is general information about the company. I am supposed to give the corporate identity number. All of you know that no corporate identity number 21 alpha numeric number, which is there for each company. So once I enter the corporate identity number in the form, it will capture all the details of the company. Then financial year for which the financial statement relates to. We have seen what you mean financial year. Financial year in case of first financial year, it is from the date of incorporation till the 31st of March of next financial year. That I'm supposed to write. Otherwise, in rest of the other financial year, other than the first financial year, it will come automatically. Nature of financial statements. Now, there are 4 types of financial statements, my dear friends, can be uploaded in AOC 4. One is provisional unadopted financial statements. Due to some reason, I have conducted the AGM or I have not conducted the AGM. In case I've conducted the AGM, it got adjourned or the accounts were not ready and have not adopted it. There are 2 reasons. Accounts can be ready, placed before the board, approved by the board and placed before the general meeting, but they have not adopted due to any reason. So in that case, I have to file unadopted financial statements with the ROC. There, my dear friends, it is unadopted. It means I have to complete the audit. It is not an exception that audit is not completed, I will not file. So you have to complete the audit, but the only technical aspect of adoption is not done due to any reason. In those cases, the answer which has been specifically provided under the new act, which was not there in 1956 act, that I have to file an unadopted financial statements with the rest of companies, saying that no, why the unadopted financial statements was there. So once the unadopted financial statements are filed with the rest of companies, the same are required to be adopted within the time specified, that is 6 months or the extended time of 9 months, not beyond that. That have to adopt it and then have to file it out. So there are 2 types. I'm doing the same filing. One is unadopted financials, then adopted financials. So whenever the accounts, financial statements are adopted by the members, at that point of time also have to file it out. This is mentioned under section 137. 137 clearly says that where the financial statement under subsection are not adopted at the annual general meeting or adjourned annual general meeting, such unadopted financial statement along with the required documents under subsection 1 shall be filed with the registrar within 30 days. The same time frame is 30 days. And the registrar shall take the same as provisionally till the financial statements are filed with him after their adoption in the adjourned annual general meeting for that meeting. So these are the processes. So don't be under the impression that no merely unadoption will be not required to file. You have to compulsorily file the unadopted financial statements as well, and as and when the unadopted financial statements get adopted at the adjourned annual general meeting, again you are required to file the same. So 2 times the same accounts are filed, and you have to end up paying fees also for the same financial statement. Adopted financial statements, we all of knows that once the accounts are adopted at a particular AGM within 30 days, I'm supposed to file the financial statement based upon the criteria whether I'm filing under XBRL or non-XBRL. See, XBRL, I still wonder why Ministry of Corporate Affairs is not taking a lesson from the Income Tax Department, wherein Income Tax Department is so elaborate. It covers not only the companies and LLPs, it also covers the individual, it covers the partnership firms, it covers the trust, it covers the societies, it covers whatnot, everybody, whatever the nature of entity, they're covering up, and they are providing the comprehensive details where I can key in the details, and at last I'll convert the XML file that will be uploaded on MCA, Income Tax Department. But in case of MCM, I'm required to have a third-party software to prepare the XBRL, which is a costly affair from the part of the promoter. Why the same facility which has been provided by the income tax department is not provided on the Ministry of Corporate Affairs website itself, where I can key in the data which is required as that of a software, and XML file is generated, and that XML file can be uploaded. The similar fact what we are doing under the income tax, I still fail to understand why ministry is not doing that. Now, my dear friends, with all due diligence and with all compliances, the board of directors has filed the financial statements as stipulated under section 137 with the rest of companies within 30 days. And all of a sudden, the central government or income tax authorities or SEBI, or for that matter, any statutory regulations or NCLT or any court has found on any application made by any person concerned that financial statements are not up to the mark, or the affairs of the company were mismanaged during the relevant period, casting a doubt on the reliability of the financial statement, then then they will order for me to revise the financial statement under section 130 of the Companies Act. Under section 130 of the Companies Act, the authorities which I mentioned just now, it is central government, income tax authority, SEBI, statutory regulatory authority or body, or any person who is concerned in the affairs of the company, may by an order made by a court or tribunal for a relevant period, if the accounts are not conducted in the manner they are supposed to conduct, or it is conducted in a fraudulent manner, or they have been mismanaged during relevant period, then they have the power to revise the financials, and the period for which the order can be invoked is up to financial years immediately preceding the current financial year. So one should be very, very clear that any modified accounts, any mismanaged accounts, if it is filed and if it is brought to the notice of the authorities, they have the power to order for revision of the financial statement. Once the revision of financial statement is done under section 130 of the Companies Act, then I am supposed to revise the financials, and revised financial statements are required again to be filed with the rest of companies. We will see that now form also, it will help you to understand. Now, there is another feature which is introduced for the first time under this act, which was not there in the old act: revision of financial statement, suo motu revision of financial statement by the management of the company. My dear friend, it will so happen that I am doing due diligence of my books of account, due diligence of my affairs. I have some commercial transaction where somebody is acquiring me, or I'm going for amalgamation or expansion, etc., where somebody is doing due diligence. During the process of due diligence, I have come to know that some of the books of some of the financial statement or the director's report or both are required to be revised to show the correct picture, or to show the picture in which the new management wanted to have. So in any of the case, if they have the reasons to believe that the financial statements or the director's report or both or any one of them is required to be revised, then the management of the company has the power to apply to the concerned tribunal, NCLT, National Company Law Tribunal, asking them with the reasons to revise, approve the voluntary revision of the financial statement or the board's report. So based upon the merits, the tribunal may order for revision of the financial statement or the director's report or both. But once the revision is done, you can't reapply for revision of the same thing again and again. So the detailed application for revision of such financial statement or the director's report or board report should be disclosed in the director's report in the relevant financial year and should be filed again with the rest of companies. In this case, whenever we get an order, whether a revised financial statement under section 130 or section 131, the order has to be filed in form number INC 28. Any order for that matter, in case of amalgamations, merger, etc., which has been received by the company, has to be communicated with the rest of companies through filing of INC 28. If the order copy is not communicated to ROC through INC 28, that order needs to be renewed this order has to be communicated to ROC within a period of 30 days. If we are not doing that, again, we have to go to the respective authority under which the order has been given and apply for condonation of delay. Then they will condone for delay. Then that need to be filed. So it is very crucial. One should be very careful whenever we receive any order other than the any authority which is concerned with the ROC. You have to communicate to ROC in form number INC 28 within a stipulated period of 30 days. This nature of revision we have discussed, whether provisional financial statements filed earlier. Now, what happens in case I am filing unadopted financial statement, then I am required to give the details in the AOC for whether provisional financial statement is filed or not, whether adopted in annual general meeting. So I think I should open AOC 4 help kit. That will give me a better understanding. Give me a second, please.
Sir, is it over, sir?
No, I'm sharing this. No, AOC 4.
Another one. Okay. No issue.
Yeah, this is the help kit. This will give the direct understanding of this form. The another important factor which, my dear friend, one should be aware of this one, the Internet Explorer of version 9 or above or Adobe Reader of level should be used for filing. Now, I was telling about the segment 1, general information of the company. You have to write the SIN number, you have to write the financial year for which financial statement relates to, the nature of financial statements, whether it is provisional, adopted financial statement, revised financial statement under 130 or 131. Nature of revision, whether it is pertaining to financial statement.
The PPT is not open, sir.
I think I've shared, sir.
That's a PDF actually.
Just a moment.
No issues.
Yeah.
Yeah.
Is it visible?
Perfect, sir.
Yeah, whether provisional financial statement filed earlier, we were just discussing that, whether if I am filing the adopted financials after filing the provisional financials, I'm supposed to write the details of the first provisional financials. Otherwise, I have to say no to this. Whether adopted in adjourned AGM, yes, I have to say. Whether adjourned AGM in which financial statements were adopted, this is what I was explaining. INC 28, in case of revised filings, enter the SRN of INC 28 filed for submission of order of the competent authority as specified under section 132, 131. SRN of AOC 4, in case of revised filing, earlier SRN of AOC 4 has to be filed. The details of directors, manager, secretary, CFO, CEO, and the company secretary has to be mentioned. Now, the directors will have the DIN number, whereas the CEO or CFO or the CEO, you are supposed to mention the income tax PAN number. That is, in case of manager, secretary, CEO, CFO of the company, enter the income tax PAN number. Yeah, these are the details whether the AGM meeting is held. If yes, date of AGM. Select whether AGM held or not. If AGM was held, enter the date of AGM. Enter the due date of AGM also to know whether the AGM is conducted before the date of due date or not. Whether any extension for financial year or AGM is granted. No, whether the company is a subsidiary company or defined under section 2 subsection 87 of the Companies Act. Now, I would like to just throw light upon this definition of the subsidiary company. Now, Section 2, subsection 87 of the Companies Act deals with the subsidiary company. It says a company will be considered a subsidiary company of a holding company because of two reasons. One is I am controlling the composition of board of directors, which is very, very crucial. Most of the professionals do not know what you mean by composition of board of directors of a company, and exercise the controls over the one half of the total voting power. So most of the persons, they simply understand that to reckon a company as a subsidiary company, I should hold 51% of the voting right in that company. That is correct. But in addition to that, there is one more requirement, which, if it is fulfilled, will also be deemed the other company as a subsidiary company. What is that? Controls the composition of board of directors. What do you mean by controlling the composition of board of directors? It says that if I have the right to appoint all or any of the directors of a particular company, then I will be treated as a holding company. Whether I'm holding 51% stake in that company or not, then also it will be treated as a subsidiary company. So one has to look whether there is an arrangement between these two companies where the earlier company, A company, has the right to appoint or control, right to appoint or remove all or majority of the directors. If the company A has the right to appoint all or majority of the directors of another company, then that company will be treated as a subsidiary company, and I will be required to fulfill the requirement of consolidation. So one should be very, very careful in finding out whether the directions of the holding company in terms of appointment and removal of any or all directors is exercised or not, for which we need to look into the contractual agreement, if any, entered into between this company. Normally, in case of shareholders agreement, we have the power which has been given to the holding company that all the appointment and all the removal of directors will be done with the consent of another company, irrespective of whether the company is having a shareholding stake in this company. In that case, that company will be treated as a holding company. In case of a subsidiary company, I have to fill the SIN number of the subsidiary company. And in case, what if happens to know my subsidiary company is a foreign company, and that foreign company do not have any requirement of getting the audit done, in that case, and that financial accounts are prepared in a language other than the English, in those cases, the translated copy of the financials of the foreign subsidiary company or the holding company or the associate company have to affix in India, duly translated, and a statement to the effect that the audit is not required to be done in the respective foreign country has to be declared in the director's report. That is more than sufficient. Number of auditors, I have to give the details of the auditors, how many the auditors can be single auditor or joint auditors, and have to give the PAN of the auditor or auditors firm. Select the auditors in individual or auditor firm. Membership number of the auditor or auditors firm. Then SRN of form ADT1. I'm not looking into the section 139, as you're all expert on this section 139. Then I have to give the name of the auditor, auditor's firm, address of the auditor or auditor's firm, the name of the member, membership number. Now, I would like to throw upon Schedule 3, which is very, very crucial. If one can understand Schedule 3 of the Companies Act, then entire balance sheet and profit and loss account or statement of income and expenditure account is perfect. I will go back to my presentation. Dashboard we use for. I think something's missing. Schedule 3. I think I'll just give what are the the understanding which I have. Some of the slides are missing actually. The schedule 3. As far as I'm concerned, I need to give the as per the section rule 4A, if I'm not wrong, rule 4 of the Companies Account Rules 2014 deals with the schedule 3 of the it gives the format of the balance sheet, profit and loss account, and it says some of the points which I would like to bring it to your knowledge is that rounding off provision is there, where if it is less than 100 crores, it should be nearest to thousands. That rounding off provision one should take care, and while filling the form, one should have the clear form which the numbers are written absolute numbers. So rounding off is not permitted in any manner while filling of the form. So one should be very careful while preparing the balance sheet. You can have the rounding off provision as per the schedule 3, but whereas while filling the form will not accept the rounding off. So you have to give the absolute numbers only. Coming to that segment 1 part B, a balance sheet, we have completed segment 2 okay, let us go for segment wise. In segment 1 part B, it says about the balance sheet, detailed balance sheet items, amount in rupees only, financial parameters, where the again another important factor which I'm supposed to ensure while filling up the form is that now if the consolidated, when I'm doing consolidated financials, if my financials of the subsidiary company or the associate company or holding company in foreign countries written other than rupees, I have to convert to the rupee. I have to convert that into the rupee, then only have to club it. So for conversion of the rupee, I have to take the dollar rate. Coming to the segment 1 part B, balance sheet, detailed balance sheet items, amount in rupees, financial parameters, balance sheet items are there. Share capital raised during the reporting period. So what is the exact share capital which I've raised? Earlier it was not there, I was telling to that. Then details relating to cost records and cost audit. Information and particulars in respect of profit and loss account. Following sections need to be filled in segment 2. Statement of profit and loss account, detailed profit and loss account item, financial parameters, details relating to principal product or services. This you have to get as per the SIN. I think not. Yeah, this segment 3, my dear friends, it is relating to the reporting of corporate social responsibility. Understanding the CSR, you all know the section 135 of the Companies Act. It is applicable when if the company is having a net worth of 500 crores or more, having net profit of 5 crores or more, turnover of 1,000 rupees. So one should have the CSR committee. Details, why I'm saying that on CSR, but I am supposed to write details to be entered in segment 3 as follows. Whether CSR is applicable as per section 135 or not, I have to see these parameters. What is the applicability of that CSR? Net profit for last 3 years, average net profit of the company for last financial years as defined in explanation subsection 5 of section 135 of the Act. Prescribed CSR expenditure 2% of the amount. Total amount spent on CSR for the financial year, amount spent in local area. So I need to have the clarity of how much I'm spending for the entire financial year and amount spent on the local area, manner in which the amount spent, whether I'm spending on my own or I'm spending through an agency. If that is the case, I have to give the details of the agency. Then explanation for not spending, I have to justify why I'm not spending the amounts. Whether a responsibility statement of the CSR committee on the implementation and monitoring of CSR policy is enforced on the director's report. So this is another important factor which I'm supposed to write. Now, the most crucial factor is covered under segment 4, disclosure about related party transactions. Section 188 of the Companies Act gives details about the related party transaction. So I'm supposed to give the nature, number of the contracts or arrangements of transaction, not at arm's length basis. So arm's length basis, is permitted under section 188, and due to any reasons that arm's length transaction is not done. So how many contracts or arrangements are there which are not done at the arm's length basis? Number of material contract arrangements or transactions done at arm's length basis. So this I'm supposed to disclose in the financial AOC4. Then segment 5 is auditor's report. Auditor's report in case of a government company, whether Comptroller and Auditor General CNAG has commented upon or supplemented the audit report under section 143 or not, I have to say. Provide details of the comments, supplements provided by the CAG of India. As we were discussing earlier, that no any disqualification remarks by the auditors, whether chart accountant or company secretary practice or cost accountant, the director has to give a reply for suitable reply. Whether CNG has conducted supplementary audit under section 143. Now, whether the auditors have reported as to whether company has provided requisite disclosures to its financial statement as to holding as well as dealing in specified banknotes during the period. This is one of the requirement during this details of remarks made by the auditors applicable for as to applicability of CARO, whether auditor's report has been qualified or any reservation or content reverse remark. If any number of auditor's qualification, reservation or adverse remarks in the auditor's report, director's comments and qualification, reservation and adverse remarks on auditor's report as per the board report. Now, CARO applicability of company's auditor's report order. CARO applicability, I have to say, it shall apply to every company. Then auditor's comments on items specified in the CARO need to be disclosed here. The other miscellaneous segment is applicability of the secretarial audit. We know that no secretarial audit applicability, whether detailed disclosure with respect to director's report under subsection 134 is attached. Attachment, normal attachment to AOC4. These are the list which have highlighted. Financial statement authenticated as per section 134, including report, auditor's report, and other documentary. These are the mandatory attachment. A question arises whether the auditor, I need to have an in-sign copy that has been done away. I can have the DSC or I can have SD also. In most of the auditor's report, financial statement, you will see that the SD instead of putting signature. Statement of subsidiaries as per section 129 in the form AOC4, I have to file it separately. Statement of facts and reasons for not adopting balance sheet, this we have discussed. Statement of facts and reasons for not holding the AGM also we have discussed. Approval letter for extension of financial year or AGM. This attachment is mandatory if any extension is been granted for AGM of financial year. Supplementary or test audit report under section 143. This attachment is mandatory if CAG of India has conducted supplementary or test audit under section 143. CSR policy need to be attached. As per this policy, as I said, if it is available on the website of the company, I need not attach separately. I need to give the salient features and changes, if any, and the website address. Details of other entities. This attachment is mandatory in case the amount of CSR is not directly spent by the company. If I'm spending through any charitable organization, qualified organization. Details of this contracts arrangement, related party transaction as per section 188. I have to give under prescribed form AOC 2. Details of comments of CNAG. It is mandatory if CNAG has conducted supplementary audit. And director's report, it is to be attached compulsorily. Sectoral audit report and details of remaining CSR activities and optional attachment. As a part of the audit, AOC4, I am also required to attach to the annual report the proxy form, and there is a requirement under the sectoral standard. I am supposed to give the route map also. This is also made mandatorily. I hope with this I have. Now let us go for the filing fees. We have seen that before signing of this form, one need to have the DSC digital signature of all the persons, managing director or the directors, manager, secretary. They are required to sign this form electronically. There is no form, there is no facility of uploading the form. in physical form. It has to be digitally signed. So all the persons who are going to sign the financials are required. AOC4 is required to have the DSC compulsorily. Now, certification, as per the requirement under the Companies Act, the compulsorily certification is to be done by cost accountant in whole-time practice, or chartered accountant in whole-time practice, or company secretary in whole-time practice. It is an onerous job on the part of the certifying professional to certify AOC4, because he has to ensure that no material fact is omitted and all the relevant facts are given, and in case any kinds of discrepancy which is found subsequently, then section 447, 448 is attracted. So one should be very, very careful in certifying AOC4. Statutory fees, it is based upon the authorized capital of the company, and it should be filed within 30 days. The company not having share capital, the fees applicable, it is only 200 rupees per document. And in case the company is having share capital and where the capital is less than 1 lakh rupees, is 200 rupees, and so forth. This is the table which is given. So highest amount which is charged for this filing of AOC4 is 600 rupees per document. Consequences of not filing the AOC4. If a company fails to file the copy of the financial statement before the expiry of the period specified therein, that is 30 days, the company shall be liable to a penalty of 10,000 rupees, and in case of continuing failure, with a further penalty of 100 rupees for each day during which such failure continues, subject to maximum of 2 lakhs rupees. So 10,000 rupees, 100 rupees, and 2 lakhs rupees is the benchmark here. If the company defaults in filing financial statement for the immediate preceding 5 financial year, the company may be wound up by the tribunal under section 271. This compulsory wounding up provisions will be applicable. If the company defaults in filing financial statement for the last 2 financial year, it will be classified as an inactive company, and the company will not be allowed to do certain filings which is required for day-to-day affairs of the company. So one has to make the inactive company as an active company, then only the filing can be done. If a company defaults in filing financial statement for consecutive 2 financial year, the registrar may, after issuing a notice of the company, enter the name of the company as a dormant company also. This is the penalty for the company, and to the directors, the penalty is as under: the managing director and the CFO of the company, if any, and in the absence of the managing director, the CFO and any other director who is charged of the board with the responsibility of complying with the provisions of the section. And in the absence of such director, all the directors of the company shall be liable to a penalty of 10,000 rupees individually. And in case of continuing failure, the failure, further penalty of 100 rupees for each day after the first day during which the failure continues, subject to maximum 50,000 rupees. So in case a company do not have a managing director, it is advisable that the company should make one of the director as officer in charge and file one form with the rest of companies, so that in case of penalty, that penalty can be restricted to only one director, not all the directors. So one has to ensure that if only all common directors are there, if I have to revive the company after it has not financially used for 4 or 3 years, I have to go for NCLT for getting the approval of the tribunal. Please clarify whether the related party transaction AOC4 should correlate with the related party transaction notes to accounts, or whether difference in reporting. See, related party transaction as per the notes to accounts is comprehensive, whereas related party transaction as per AOC2, which is given the director's report, only required to give in the AOC2. So I am restricted to file AOC2. In AOC2, the related party transaction which is given in the director's report, not in the notes to accounts. Because notes to accounts, I will be following the accounting standards, which will be very, very comprehensive. A proprietary chartered accountant firm appointed as auditor for a company for 5 years convert into partnership without changing firm's name. Please clarify whether it requires filing of ADT3 or ADT1, or reappointed by the company, or mere intimation. So ADT3 will suffice because the same partner is there. It is the nature of entity which has been changing. So ADT3 would suffice, and intimation by the company, intimation to the company. Please clarify whether the related part, I have seen this, whether segment 4 of AOC4 is applicable to small companies and any exemptions available to small companies. for disclosure requirement of AOC 4. I think it is exempted for small companies. Yes, it is exempted. What would happen if we have to revive the company? I have to go to ROC, NCLT. I have to file a petition with NCLT. In NCLT, based upon merits, they will direct the ROC to revive the name of the company. If a company has not filed its financial statement for continuous period of 3 financial years, then every person who is or has been director of that company shall not be eligible for reappointment as director of that company or appointed in either company for a period of 5 years. So then disqualification will be attracted for a period of 5 years. If any director or any person makes a statement which is false or omits any material facts, he shall be punishable under section 447. 447 is not restricted to only directors or person making a statement on behalf of the company, but also for the professional who's certifying the form. So professionals need to be very, very careful while certifying the form. Any questions? I think I have to, I have completed before time. I'm sorry I have missed out some of the slides for this segment reporting. Any questions, my dear friends? Or else you want me to run through the form AOC4, then we can run. Srinivas Garu. Shall I run through the form for a better understanding? Okay, let me run through the forms.
Yeah, please, sir.
Yeah, this is the form AOC4. Undoubtedly, I would like to say this, this logo which says Satyamev Jayate. So the person who's certifying the form has to understand the meaning of this Satyamev Jayate. Then he will be protected from this provisions of section 447. This form is pursuant to section 137 of the Companies Act, right, with which we have discussed, and this form can be filed both in Hindi and English version. So we need to fill the CIN number, email ID of the company, which is mandatory, and the star mark, which is there, as you all know. These are all mandatory things. Finances, year to which the financial statement dates, date of directors meeting in which financial statements are approved. This is very, very crucial, because unless I approve the financial statement in a directors meeting, I will not be able to place before the members meeting. So directors meeting approval is mandatory for the financial statement. On that date only, the directors and the representatives on behalf of the company, they will certify, and the auditor will also certify. Nature of financial statement, we have discussed elaboratory, provisional, unadopted, adopted financial, revised financials under section 130 and under section 131. Then details of directors, managers, secretary. Then if DIN or PAN number is enabled, date of signing the financial statement, this will come as pre-fill. See, date of directors report. So they're asking two directors report. One is directors report where the financial statements are filed, and date of directors report where the directors meeting has approved the directors report. So these are two different dates. So there is a possibility that financials can be signed at one day and directors report can also be signed in another meeting. Date of Signing the report by the financial statement by the auditors. Whether AGM is held or not applicable. If held, what is the date of AGM? Whether the company is a subsidiary company as defined under section 2 subsection 87. Here one should be very careful whether I'm having the control over the appointment of directors, any or all directors of the other company. That will also be considered as a subsidiary company. So one should be careful. We will not be able to know whether that company is a subsidiary company by virtue of this provision. Whereas if the other company is holding 51% or above in the other company, that is available, the list of members, but the arrangement under 187 subsection 2, one should be very, very careful. Then I'm supposed to give the details of the subsidiary company, SIN number of the subsidiary company, name of the subsidiary company, proviso under which I am a subsidiary company, whether to subsection 8 having that full control on the affairs of the company or by virtue of the shares. Then number of auditors, how many auditors? In case of joint auditors, it can be more than one auditor. Whether the auditor is individual or a firm, membership number of auditors registration form, SRN number of ADT 1. Where ADT 1 is not applicable, they have given the provision of Z999. There is a provision, we can fill it up. Name of the auditor or auditor's firm, address of the auditors, name of the members signing the above form on behalf of the auditors. Whether Schedule 3 of the Companies Act 2013 is applicable, and nature of industry. Most of the companies where we file it is commerce and industrial. We seldomly will come across the banking company, insurance company, power company, and non-banking NBFC company registered with RBI. So for all the companies which are not falling under this category, I'm supposed to select this commercial and industrial category. Whether consolidated financial statement is required or not. So I'm supposed to say whether I'm required to have consolidated. As we discussed, whether companies maintain books of accounts and other relevant books and papers in electronic form, which we have to give it. If I say yes, then it'll ask for another. These are the information. It's asked that complete postal address of the place of maintenance of computer servers storing accounting data line. So I have to give the exact address where my servers are been kept. And as I told you, in case I'm having foreign subsidies and foreign accounting is done, but mandatorily I need to have servers maintained in India only. And if I'm maintaining the account through a service provider, then I'm supposed to give the details of the service provider also. Whether the books of accounts or other books of paper are maintained on cloud, yes or no, that also I have to give. Then balance sheet, this is very, very comprehensive. I have to write everything in rupees. It cannot be written in lakhs or in crores as required, has been provided in the Companies Act. It should be only in rupees. So one has to take another set of balance sheet which carries the rupees details. Detailed balance sheet items, amount and details of long-term borrowings. I have to keep the long-term borrowing details for short-term borrowings. See, it may happen. I've seen many of the balance sheet which is not drafted according to the balance sheet. So I have to regroup it. So sometimes my balance sheet total will tally, but it is not exactly as per the format which is given in this AOC 4. So I have to be very, very careful in doing that as well. Particulars of long-term loans and advances, details of long-term loans and advances, details of trade receivables, financial parameters. This is very crucial. My dear friends, share application money given during let us say share application received during the reporting period. As all of you know, acceptance of deposit rules are very, very stringent. If I'm not allotting the share application received by the company within a period of 60 days, then I'm supposed to refund it. If I'm not refunding it within period of 15 days after the expiry of 60 days, then it will be deemed as a deposit and will be penalized according to the acceptance of deposit rules. So one should be very, very careful in this. Then deposits matured but not claimed, unclaimed deposits, unclaimed matured debentures. Net worth of the company, it has been specifically defined with the Companies Act. Accordingly, you need to calculate the net worth of the company. Another important factor which this no intellectual property rights, IPRs. Most of the companies, they have the trademarks, they have the copyrights, they have the patents. But if I look at the balance sheet, no amount is mentioned as to the value of this IPRs in my balance. So it is strongly advisable to the companies that they should value the trademark as well. What will happen if I have to do it? Okay. Share capital raised during the reporting period, detailed records and cost audit, whether maintenance of cost audit is mandatory or not. This is segment 2, information particulars in respect of profit and loss account. In case of first financial year, all of you know the reporting, the corresponding period will be 0. It is only subsequent financial year the corresponding period will be there. Detailed profit and loss account, details earning in foreign exchange, detailed expenditure in foreign exchange. Then financial parameters, details reporting relating to principal product. This is as no, if you see that no sin alphanumeric number, the sin number will also carry the 4 digits code as to what the business operation is into. Whether CSR applicable, net worth, average net profit, prescribed expenditure, this we have seen in detail. Disclosure about related party transactions, this is another crucial item. Auditor's report, remarks about the CARO, second order applicability and attachment. And if the size of the attachment is increasing, you have one more form. I will open that form for you. This is additional attachment to form AOC4. Here I can give any document which I may not be able to attach there. Copy of financial statement duly authenticated. So if the size is increasing, I can attach all this here as well. Then certification, I am authorized. You need to give the mandatory the board resolution number. Board resolution number can be given in most of the companies to avoid the repetition which board number have given. I have given an omnibus board resolution authorizing any one of the director to file the form. So that board resolution can be taken while filing all the forms under the Companies Act. Then writing that no, this is the certificate of practicing professional. I always look at that no, section 448. This is the declaration which I'm giving. One should be very, very careful. Section 447, 448. Now, whether this form is auto approval, yes. The moment you file the form, unless it is for a revision of the accounts, normally it is an auto approval form. The moment you file the form, it is auto approved. With this, I would like to complete my session. And if you have any questions, you are welcome.
Friends, if you have any queries, you can directly ask, sir. The settings are already changed to the, you can unmute yourselves. There is no problem. Directly, you can ask the queries to Manoj, sir, so that he can apply the things.
Anyhow, if you have any questions subsequently also, I have given my phone number and email ID. You can reach out to me anytime. I'll be happy to respond to the queries of the members if any.
Thank you, sir. Thank you very much for gracing here and informing about the things. See, really, that's a value addition to us because most of the cases, some things are missing by the chartered accountants basing of these things. But you have taken enough time and in informing about the forms and also attachments and Schedule 3 and other things also. Thank you very much for informing about all the things. Friends, if nobody is having any query or something like that, we can wrap up the session. Or you can post it in the chat box also. Sir, are you answered this question, sir? What would happen if I have to revive the company after it is not filed the financials of?
Yeah, I have said, sir, I have to go to NCLT. I have to go to NCLT, file a petition for revival of the company.
Okay, so we have to go to the NCLT for
Yes, sir.
revival of the company.
Yes.
If the things are not filed after for consecutively 3 years or
3 years or more. Yes.
Yeah.
There are cases where the NCLT has permitted where the finances were not filed for 10 years as well, provided you give a clear justification why it has not been done.
Yeah, of course, it is always there. And whether segment 4 of AOC 4 is applicable.
No, it is not applicable.
Companies.
Not applicable small companies.
Okay.
If company is in default for not filing, responsibility auditor of the company, please clarify. See, if company is in default for not filing or responsibility auditor will not be held responsible for non-filing on part of the company or non-conducting the AGM, because auditor responsibility is totally different. Auditor will be held responsible if the audit is not done in a proper way according to the company's or according to the accounting standards. Whereas auditor responsibility has nothing. He do not have any responsibility or role to play for adoption of the financials or for conducting of AGM or for any compliances on the part of the company. Auditor is not an agent of the company. Auditor and company have a relationship of principal to principal. Procedure in case of strike of companies. In strike of companies, you have to file a petition with the appropriate NCLT bench of the respective state. There's a prescribed procedure is there. The bench will call for the information from register of companies whether they have any objection for revival of the company. If the ROC has no objection, if the bench is satisfied with the reasons for given for the non-filing of the financials, then the bench will instruct the ROC, will pass an order instructing ROC to remove the strike off of the company. So that is the elaborate procedure which has been given under section 252 of the Companies Act.
In that case, the directors will be disqualified, sir?
No, sir. The company, once it is striked off, it ceases to exist. So who will file an application before NCLT for revival of the company? A company can't do that. It is only the directors. Yes,
Okay.
Directors are disqualified. Directors are, it is the promoters of the company who will apply to NCLT for revival of the company, which is striked off. The moment the company strike off, the directors are deemed, they are disqualified to act as directors.
Yeah, for the next 5 years, sir.
Yes. It is the choice of the auditor whether to resign or not. No one can force the auditor to resign. But if it is better on the part of the auditor to take a call on the why the default has been done. Based upon the facts, one has to take a call whether to continue with the company or to resign as an auditor of the company.
So friends, as there are no further queries, I would like to conclude the session. Thank you, Manoj sir, for taking a lot of pains and allotting time to us and informing about the intricacies of the filing of Form AOC 4. And really, it is a value addition to us. Thank you very much. If there are no further things, we'll close the session.
It is my pleasure, sir. Yeah.
Latest query is there, sir?
Is there any procedure for appointment of new director in case of strike off company? Please understand, when a company strike off, it ceases to act as it exists. So there is no provision under any law you can appoint a new director in case of strike off company. First, you have to revive the company with the existing suspended directors. Then, after the strike off is removed, when the company is name is re-entered in the register of companies, then you can appoint a new director, not before that.
Friends, I once again informing you all that tomorrow there are going to be elections for our branch. I request everyone to execute their franchise and elect your management committee members for your branch. And I also request to attend for the next set of virtual CPE meets on which is going to be conducted on 3rd, 4th, and 5th of this month, 5th of the February. 3rd is going to be an analysis on the budget, which is going to be covered by the Abhishek sir and also Sangu Ramakrishna sir regarding the indirect taxes. And on 4th, we are just planning for the IT session, income tax on shares and fund vote transactions, whether tax audit is going to be there or not. And on 5th, it is Irigangi Associates V.S. Sudhir and his partner is taking up the annual return and also filing of the reconciliation statement. So with this, I conclude this session. Thank you, sir. Thank you very much for this thing. Thank you everyone for the patiently listening to the company.
Thank you so much. Sir.
Thank you.